Good day Forex trader. Your USD Forex signal, drop to 1.1200 still likely. There is a likelihood that the pair will resume the downward trend as the fears of the Omicron variant remain. Bearish view. Sell the Euro USD pair and set a take profit at 1.1200. Add a stop loss at 1.1400. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1310 and a take profit at 1.1400. Add a stop loss at 1.1250. The Euro USD pair tilted upwards on Tuesday morning even as concerns about the Omicron variant remained. The pair rose to a high of 1.1300, which was relatively higher than last week's low of 1.1235. Omicron variant concerns. There are significant concerns about the Omicron variant as the number of cases has continued rising in Europe and the United States. Germany confirmed more than 38,000 new cases on Monday while France recorded more than 48,000. These numbers are the highest daily increases in the past few months. As a result, European countries are actively considering new measures to curb the spread. For example, the Netherlands has already announced a nationwide lockdown that puts limits on non-essential businesses and travel. In Germany, the government announced new limits on travelers from the UK. These travelers will need to have a negative COVID-19 test and then stay in quarantine for about 10 days. France has also applied similar rules for travelers from the UK. They must self-isolate and have a negative test. Therefore, analysts believe that the variant will affect the overall recovery of the American and European economies. This explains why US and European stocks retreated on Monday. In the US, the Dow Jones and Nasdaq 100 index declined by more than 600 and 220 points respectively. Similarly, in Europe, the DAX, CAC 40, and Stoxx 50 declined by more than 1%. The Euro USD is also rising as investors buy the dip following last week's central bank decisions by the Federal Reserve and the European Central Bank, ECB. The two central banks decided to leave interest rates unchanged. But they offered different guidance, with the Fed hinting that there will be 3 rate hikes in 2022. The ECB believes that rates could remain at the current level in the coming year. Euro USD forecast. The Euro USD pair declined to a low of 1.1235 last week after the ECB and Fed decisions. The pair then erased these losses on Monday and Tuesday morning and is currently trading at 1.1300. The 4-hour chart shows that the pair has formed a rectangle pattern. It is currently slightly above the lower side of this channel. The Relative Strength Index, RSI, has moved to the neutral level of 50 while the stochastic oscillator has moved slightly above the oversold level. It is also slightly above the standard pivot point. Therefore, there is a likelihood that the pair will resume the downward trend as the fears of the Omicron variant remain. GBP USD Forex signal, sterling recovery in peril. Bearish view. Sell the GBP USD and set a take profit at 1.3100. Add a stop loss at 1.3300. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3250 and a take profit at 1.3325. Add a stop loss at 1.3150. The GBP USD pair was in a tight range as investors assess the rising number of COVID-19 cases in the UK and the US. The pair is trading at 1.3225, which is a few points above Monday's low of 1.3175. UK and US COVID cases. The GBP USD pair retreated last week as investors reacted to the interest rate decisions by the Bank of England, BoE, and the Federal Reserve. The two banks sounded hawkish, with the BoE surprising investors with a 25 basis points rate hike. The Fed hinted that it will implement 3 rate hikes in 2022 and end the quantitative easing in March. This week, focus is solidly on the Omicron and Delta variants that are spreading rapidly globally. In the UK, Recent numbers showed that the country had more than 80,000 new infections on Sunday even after the government unveiled Plan B restrictions last week. Therefore, there are concerns that the government will intensify restrictions in the coming weeks. According to the Telegraph, a source at the Prime Minister said that the government will likely step to restrictions after Christmas. These restrictions will lead to the closure of non-essential businesses in the country. As such, there is a likelihood that the country's economy will slow down in the coming quarters. Indeed, in a statement, the head of one of the biggest restaurant chains in the UK warned that the sector could collapse if the government goes on with the lockdown threat. Meanwhile, in the United States, analysts are watching the Build Back Better (BBB) deal that appears to be failing in the Senate. On Sunday, Senator Joe Manchin said that he will not vote for the $2.2 trillion deal. Without his vote, the bill will be unlikely to pass considering that the Senate is divided 50-50. GBP/USD forecast. The GBP/USD pair is trading at 1.3225, which is a few points above the lowest level on Monday. On the 4-hour chart, the pair is a few points below the standard pivot point. The pair is slightly below the 25-day moving average while the relative strength index, RSI, has been in a bearish trend. It is also slightly above the important support level at 1.3195, which was the lowest level on November 30th. Therefore, the pair will likely have a bearish breakout as bears eye the key support at 1.3100.